Hello, everyone, and welcome to another episode of The Pragmatic Investor. My guest today is Mike Fay, a recurring guest on the podcast, and always a pleasure to talk to. Now, we began today by talking about the recent developments in the Ripple case and how this has affected the crypto market in general. We then moved on to talk about gold, and Mike has recently talked about gold on Seeking Alpha, written a very interesting article about gold and the idea that the BRICs are going to be soon launching a gold-backed currency and how this is going to affect things both, for gold and of course geopolitically. In our last conversation, we talked about that upcoming recession. This hasn't quite materialized, of course, for various reasons. And today we talked a little bit about why this is the case and what we expect going forward. I always really enjoy talking to Mike. He's incredibly knowledgeable when it comes to these kinds of topics. And if you haven't already, go ahead and follow him on Seeking Alpha and Twitter, Mike Fay, and also on Substack, where he writes under the name The Heretic Speculator. As always, I hope you enjoy this conversation as much as I did. Jump straight into this. Now, you had an article on Seeking Alpha recently called Ripple Ruling. Coinbase might be the biggest winner. So, for everyone listening, if you wouldn't mind, could you just break down a little bit what's been happening with Ripple and how this is affecting kind of the crypto space, especially when it comes to Coinbase and altcoins?
Yeah, sure. So essentially, Ripple was sued by the SEC several years ago. Ripple was developed by a company called Ripple Labs. And so there's kind of like a confusion about what is what. Ripple Ledger, Ripple Labs, XRP, the actual token. It can get kind of obfuscated and everything. Long story short, they're in court and it goes on for a long time. And this judge recently ruled that XRP, the coin, is considered an unregistered security when it's sold to an investor privately or a venture capitalist. However, on secondary, when it goes through an exchange with programmatic sales, she ruled that those are not securities. And so this kind of creates a situation where, all right, now if Ripple's not a security when it's sold through an exchange from, a programmatic selling perspective, that kind of means that all these other tokens that the SEC has stated to be unregistered securities as well probably are not under that same framework. The question then is that framework correct? Does the SEC appeal? How far does it go? After appellate court, if it doesn't go their way, does it go to Supreme Court? These are all just guesses, but as of now, the precedent that has been set by this judge is that XRP sold on exchange is not a security when it's sold to a retail investor. The reason for that decision is because the investor is not actually buying and that money is not going to Ripple Labs or it's not going to a centralized entity. It's going to a separate purchaser or seller, excuse me. We'll see, if that is the way that it goes. And I think that you could make a very compelling case for that being a legitimate perspective. Then the SEC's lawsuit against Coinbase kind of falls apart because Coinbase didn't do any ICOs. None of the coins that they sold were through some venture method. It was all secondary sales. So it's interesting. I think it's actually very good for Coinbase, and I think that we'll see how it goes from a precedent standpoint, and if it's appealed, and if there's a dissenting view. You know what I'm saying?
Of course, yeah. I mean, I'm not a lawyer, obviously, but I guess the idea is that, like you said, this can set a precedent, but it's not the end all. It's not a definitive answer, right? Because we could still get the SEC appealing, or again, different rules being applied even to different coins, perhaps.
I think that that's probably the most likely outcome because you have a lot. I think where the regulators are going to be able to make some pretty strong cases for a lot of these things actually being securities is when it comes to staking. But and staking as a service, I'm not saying that it's right or wrong, but I'm saying that I do think that they will find maybe more success in that. If you use a token for a utility, for a gas payment, for as some sort of instrument within the protocol itself, to me, it's more of a commodity or a synthetic commodity. But when you get into the thing where it just exists to be a governance token, then it's a lot more like an equity, in my view.
Right, of course. And now, of course, this is also very good for Coinbase because obviously Coinbase was also involved. The SEC sued Coinbase for the sale of unregistered securities, and this is kind of saying, well, maybe that's actually okay. So investors shouldn't be so worried about that. Now, you did write that article. You didn't actually have a bullish outlook on Coinbase. Is that correct? Then, I mean, how do you feel about Coinbase moving forward? Because we did see the stock. I mean, the stock has gone up, I think, close to 100% in the last month. How do you feel about the outlook for Coinbase in particular?
It's interesting, and it depends on if they can grow a subscription service or not. And, you look at their revenue breakdown, and their margin on institutional purchases is super low compared to their margin on retail. And so if retail doesn't come back and start buying through Coinbase, there's a problem potentially with Coinbase because what they don't want is more institutional money coming in at a super low margin, because that's just not good. If they can get subscription revenue up, but some of that comes from the staking services, a lot of it other instances of it is from the treasuries as well. They get yield on USDC because USDC, the collateral backing that, is US treasuries. So if rates come down, that's another way that Coinbase's revenue story sort of starts to fall apart. I like Coinbase as a customer. I just don't know that I like the stock. There is a distinction between the two. And I also think that, we can see through 3 years of data that the move for traders is going towards DEXs, not away DEXs. So I think that's why you're seeing Coinbase, trying to implement layer 2 scaling solutions for the company to survive long term. If we're going to have an on-chain future, which is what I think a lot of crypto advocates, myself included, actually want, centralized businesses are going to have to adapt. And so I think there's a lot up in the air on Coinbase. I wouldn't short it because there's just there's a retail component to it. There's a crypto component to it, a hype component. The thing could move against you bad if you short it. But I also, like I said in the article, the main takeaway was, I don't know that I'm chasing it at 105. I'm on the sidelines and I'm perfectly happy with that position.
Yeah, absolutely. That makes a lot of sense. I mean, when I was looking at it, I was looking actually at a kind of from a DCF valuation standpoint. I was looking at, well, if you look at all the revenues it was making before, the margins, if it could just go back to those margins, you'd think the stock is very undervalued. But of course, as has been pointed out by others, how can those margins come back really when, like you say, you have all that move away from centralized exchanges and basically a lot of competition as well, because Coinbase has, it has to compete with a lot of other exchanges, and it can't just, the fees aren't very high, but they're substantial. They've come down, but they're still substantial. You have to wonder how much they can keep profiting from retail, right?
Yeah, it sort of becomes, there's a potential for a race to the bottom in fees, isn't there? Because if people are moving assets off platform and are doing these swaps themselves, you have to entice these participants to keep their assets with you so that you can process those transactions and get whatever small vig off the top that you can get. And I just, I think their model is going to change over time.
Right. It's going to have to, of course. Now, with the ruling of the XRP case, we did see a lot of the altcoins kind of, liven up a little bit. And, the altcoin market is something that's been a little bit dead lately, let's say. Of course, we've seen Bitcoin really make a comeback. Ethereum to an extent. Select altcoins, altcoins are altcoins, right? Some of them are still up 100, 200%. But in general, you're seeing some kind of, a lot of people kind of a bit less bullish on altcoins. Is this a contrarian signal? Maybe now's the time.
I think you have to be selective. I think we see every cycle that altcoins kind of moon together.
Mm-hmm.
And then the ones that are actually somewhat better than the total junk, while they may not outperform Bitcoin over time, they can at least hold some of their value through cycle to cycle. So again, you just got to be selective. I like certain things. There are others that I don't. And I think that we're also seeing kind of some of not the questionable networks, but we're seeing some of the layer one scaling chains, the alt chains, specifically the ones that were called securities by the SEC. They're having a lot of problems. Algorand specifically, and I'll disclose that I own Algo. I liked this idea. I think, it's to quote Gary Gensler, it's good tech. But that network has really struggled since the SEC designated it an unregistered security. You saw their top DeFi protocol just essentially go under within the last couple of weeks. There was a wallet hack on one of their primary wallets earlier in the year. It's been bad news after bad news after bad news for Algorand, and yet it has some of the most interesting applications that are built on it that a lot of people don't really notice. There's not a lot of hype. Algo, again, I'm long and I'm disclosing that. I think Algo is a very contrarian play that might make some sense. Others, you have to use your own judgment. I think it varies chain to chain. Avalanche looks really interesting to me now. Solana, I hold AVAX. I don't hold Sol, but Solana, kind of left for dead there after FTX, but it's right back above $25 a coin again. You just have to kind of be patient with some of this stuff. And if you're, you have to know what your process is when you're looking at altcoins. And as I mentioned earlier, some of these things are probably securities. Some of them are, I think, commodities. And if it's a commodity, how is it used? How is it used in the network? How is it used in specific protocols? And then if you can figure out how it's used, how do you value it? And you just have to have a long-term viewpoint, and you have to have a legitimate process. You can't just ape into garbage.
Right.
It works for a short time, but it doesn't work for the long term.
Yeah, and definitely maybe, of course, with the kind of more macro environment, of course, with all the QE and 0% interest, maybe back then, it was all right, everything was going up, but that's certainly not the case now, and it's probably going to be a lot harder going forward. I will say I actually talked about Algo with my subscribers, and I actually sold out my position, kind of based on all that happened. Yeah, it was a small position, but yeah, I kind of sold out from that. Also based on the chart a little bit, it just, the chart got all messed up. As you know, I do a lot of technical analysis as well.
Yeah, but the chart looks terrible. The chart looks terrible, and the fundamental story looks terrible.
Right.
So, who could blame you, right?
Right. Yeah. I mean, again, that was to raise cash for other investments. And actually, I'm looking at now basically picking up a little bit more of XRP, which, on the other hand, has received a lot of chart looks a lot better, and the fundamental news is great. Not only on the front of the SEC, but I think we've received some very interesting news. For example, I don't know if you saw the Bank of Japan is going to be using XRP to settle transactions. I don't know if you read about that.
I didn't see that. That's interesting.
Yeah. So I don't know. What are your thoughts on XRP? Because we've seen it kind of blow up quite a bit in the last few weeks. Any thoughts fundamentally on the long-term outlook?
XRP is one that I've generally avoided. I have not necessarily liked the what I've feared to be a centralization concern from it. Yeah. There's I think whale holdings are something that you have to always be very cognizant of when it comes to all of these things. And XRP, I've used it. I've tried it out because I tried out a lot of these things before, I write about them or analyze them. And one of the things that I don't know why, but it just rubbed me the wrong way as a user is that you have to have a minimum wallet balance. And I just didn't care for that. And I felt like if I don't like this, I don't think other people are going to like this either. And so I questioned the potential adoption at the user level. Because why do I have to put in these XRP that I then can't get back out? But that's a silly thing. But it's just I've always tried to view things through the eyes of the end user, and if it makes sense to the end user, then I think it makes sense to look at it. XRP for me, just that was a sticking point, and when you factor in the centralization concern as well, I just haven't looked into it since. So I'll revisit it, but I can't really give you a yay or nay on it personally. I don't know enough about it.
Right. Yeah. Well, I mean, I kind of feel the same at this point. I mean, I've talked about XRP, a long time ago. I'm not really sure why the Bank of Japan is, doing this with XRP. Why they're picking XRP exactly, or so again, I'm not exactly sure. I just know that it sounds good. That's something.
The swaps they're very fast. Fast transaction is a huge thing. When you mess around with these things and you play with them, you can see such an obvious difference between things like Bitcoin, Litecoin, and Ethereum, and then like Stellar or XRP or Dash is also very fast.
Right.
So that's another thing that goes into the usability, though, and the end user. Do they care about minimum balances, or do they care about transaction speeds and having things settle at that time, at point of sale?
Right. Exactly. Well, that's that trilemma, isn't it? I mean, you can't quite have it all in crypto. It seems at least not yet.
Yeah. Now, I mean, you can't really have it all in anything. So.
I wanted to change pace a little bit and talk a little bit about gold as well, because you also wrote a very interesting article recently on gold, talking a bit about this idea, the BRICs nations, of course, coming out and coming out with basically what could be defined as a gold-backed currency. Is that right?
It looks that way. So earlier this month, or maybe it was at the end of June, I can't remember. The Russia Today put out a story that the BRICs nations, which is Brazil, Russia, India, China, South Africa, and a few others who are also in the coalition as well. Those are the main ones, though. They are having BRICS Summit in August, and it is anticipated that at that summit they will announce a gold-backed currency. I take the view that this is something that has been probably in the works for quite some time. And I think that it's a very strong move towards, at least at minimum, fracturing BRICS from kind of the G7, right? And challenging dollar dominance to a certain degree. And the reason why I view that is because if you look at two things over the last 10 to 15 years, really since the financial crisis, you've seen China, you've seen Russia, you've seen India, and now more recently Brazil increasing their gold reserves. China specifically hasn't really added many U.S. treasuries to their FX reserves. Russia's basically, they're all gone. And they, even before they went into Ukraine, they had been selling them off for several years. So when you look at that trend of both adding gold, minimizing exposure to foreign reserves, and then having this partnership together now where you have manufacturing in China, you have oil production, and energy production in Russia, you have the ability, if you have an actual strong coalition of these countries, you have an ability to break off from the Western world to a degree and start your own thing and stop using dollars. And to me, this is not something that's going to happen overnight, but what makes it viable is that, excuse me, when you adjust GDP for purchasing price parity, the BRICS nations are now actually have a larger share of GDP than the G7. So they're a very important component of the global economy, and they can certainly, if anyone can do this, they have a shot.
Right.
And so I think it's really interesting. I think it makes gold a very important asset for global monetary purposes. And I think that, I think that people should have gold. I'll just leave it at that.
I mean, that's not news to anyone who's heard us talk before. I think it's pretty obvious where we stand, and kind of the old story, right? I mean, you have obviously the dollar being the world reserve currency, and people turning around, quite fairly saying, "Oh, what are you going to do? Are you going to start using the Brazilian real or the Chinese yuan?" Well, of course you're not, but it's pretty clear that you can use gold, and that's kind of what they're offering, and if the BRICs offer gold-backed currency, then I think some people might be quite happy about that, right?
I think so. And other things to note is that gold is one of the few things that's truly permissionless. There, as an element in nature, it is the closest thing to perfect we have. It doesn't tarnish. It doesn't erode. It has stood the test of time. And peer to peer, when you have close physical proximity, there's no liability. You don't have to. You can hand it to somebody else in exchange for a good or service. And there are everything else that has been built to challenge gold has some major flaw. For instance, fiat currency, I don't even think we need to get into it. It's pretty obvious.
Right.
But you've got a central issuer and manager that controls the supply, and to a degree also the yield that you can return on, staking it, to use a crypto term. But yeah, I feel, and even Bitcoin, cryptos, you need electricity.
Right.
There is no perfect. Even gold's not perfect, but it's close. It's close. It works. The thing is these things work so well together, right? You don't want to have a centrally. I don't like the idea of Paxos Global having gold reserves and relying on a third party per se, but it's not terrible if you choose to go that route. I like Bitcoin better than that because you don't need it to rely on a custodian. You just have to pay to use the network, right?
Right. Yeah, of course, that makes sense. It's kind of that classic kind of push-pull between centralization and not centralization, kind of freedom, not freedom, kind of,
right.
All right, let's create a government, but we'll have this document that says that you can't do this, and like, oh well, let's create currency and kind of we all get in debt with each other, but the gold kind of at least used to stand as well, the backstop for everything, which obviously hasn't been the case for a long time, but it seems like I think you eventually need it, right?
And I think when you look at gold too, and this is not something that I covered in the article, but it's been well covered on Seeking Alpha and other places, is that we don't really know how many claims there are on the same gold bar. And I think that's one area where Bitcoin is actually a lot better than gold, and it's probably because we don't have that total TradFi adoption yet. But with gold, you have investment demand through ETF flows, you have central bank holdings, you have the ability to kind of, put a ceiling on it if you want to, because you can lend it out, and there aren't great ways to check against that. But because Bitcoin is open and you can see where everything is going on the blockchain, it's much easier to call someone's bluff. Right.
Yeah. That's true. That makes sense. I mean, ultimately, people are gonna lend money or not lend money. I mean, you can't really control that. I mean, that's just a free market. But I think the ultimate thing about gold, right, is you have that vehicle where at the end of the day you say, okay, if it gets out of hand, you say, let's stop this madness. Where's the gold?
Yeah.
Actually, give
Yeah,
me the
yeah, show
gold,
it to
right?
me. Show it to me. Yeah, yeah. Well, and that the beautiful thing is that they work so well together. If you're
Mhm.
someone who is kind of short the establishment, then you
Right.
hold physical gold. You keep it with you. You don't tell anybody that you have it, and then it's there if you need it. And then for anything cross border or online, you've got
Hmm.
Bitcoin or something like Bitcoin. They're complementary, and I think that getting into the whole like tribal camp situation is just not helpful, because
Right.
these things do work so well together. But we're human.
Now, so because I've seen these valuations before, so in terms of gold, then with like let's say the idea that it could basically become the reserve for a new kind of currency. Is there any kind of valuation method you use there? We think, well, that means that gold should actually be worth this much today, or something like that.
I mean, I think the classic one is money supply, right? So like if you
Right.
have
Yeah.
like a 40% reserve ratio or something close to that, I think
Hmm.
is one way that people have looked at it. And then if you look at it that way and you reprice it based on currency supply, then the price should be probably a couple multiples from where it is right now. Um,
Hmm.
I think that with gold specifically, and maybe to a larger degree silver, um,
Hmm.
you just kind of have to play the cycle, and play the sentiment. And the old adage is when the when the cab driver or when the Uber driver is
Right.
is talking about it, it's probably close to time to get out.
Hmm.
And when I say get
Right.
out, I don't mean like sell your physical gold. I don't sell my physical gold. I've held it for years.
Hmm.
Um, but when you take on exposure through other ways, like Sprott funds or like GLD, or if you want to get really crazy, the miners, which
Right.
can move, 5 to 10x or more in a legitimate cycle, sometimes
Hmm.
a lot more. Those are the ways that I think you take profit in the thesis. So
Hmm. Yeah, that makes a lot of sense. And when you talk about sentiment, that's also something that, I notice with gold, for example, being near all-time highs. I mean, it's come down a bit. It's still kind of nearing that level, though. And you're not really seeing too much bullishness, which, kind of makes me think that, we're actually just at the beginning of something much larger.
I
That's
agree.
kind of,
I mean, from what I've seen, sentiment in the metal is pretty bad. I think that you got really close to breaking out above 21,000 USD, or 2100 USD a couple months ago, and people got really excited, and then the rug came out from under people again, and it ended up back down a couple $100 per ounce. People are really tired of that ceiling kind of being the ceiling, and when that happens over a long period of time, as it has, people just get impatient, they get down, and I like watching that. Honestly, I
Mhm.
feel bad for people's mental uh, state, but when you keep hitting that ceiling and then you keep coming down and making a higher low, eventually the ceiling is going to blow. And
Mhm.
I don't know if it's this year, I don't know if it's next year, but it's going to
Yeah,
happen.
absolutely. I think, and from a technical perspective, I've been talking about. I think that at this point now, we may have actually we may actually now be ready to really break through in gold. Silver also, I'm very bullish on. I don't know what your thoughts are on silver. Do you see it as kind of the same, like in that monetary sense as gold?
Oh, absolutely. Yeah, totally. I really
Mm.
like silver. I get excited when I pay somebody in cash, because if they give me quarters back, I look at the year and I'm like, did I get any silver today? No, I didn't, because silver has been a monetary instrument,
Right.
in most countries. And you go back far enough, and the coinage is silver. Um, so anyone who tells you that silver is not a monetary instrument, I disagree. I think it is, and I think that it's great to have it. Um, it obviously is volatile, because in addition to being a monetary asset, it's also an industrial asset.
Mm-hmm.
Uh, but then there's also a potential bull case there. I'm not an expert in, energy or solar, but from what I
Right.
read, there's a component to that might
Mm-hmm.
make some
Yeah,
sense.
absolutely.
So I think I think silver's great, and I think it's wise to have both. Um, Silver probably upshoots, and in the way that I've played it in the past, what has worked well for me is when I think we're at the beginning of a cycle, I go heavier silver, and then when I think we're at the end of a cycle, I rotate that silver into gold.
Mm-hmm. Right, interesting. Now, hopefully, 10, 20 years from now, we'll all be living in this nice world where gold and silver are back at the center. Not what we have right now, of course. We're still tied up in the world of the Federal Reserve and all that good stuff. So I wanted to talk a little bit about the macro outlook, because I remember, I believe last time we talked, I don't know if that was like 5 months ago, more towards the beginning of the year, where
Mm-hmm.
the consensus still was kind of that, that very anticipated recession, which
Yeah.
hasn't quite come yet. And of course, we've seen a massive rally in stocks, at least certain stocks. Although every day more stocks seem to be joining the party. I've said before that
Yeah.
the bears of the there's no breath to this kind of quieting down in the last few weeks. Yeah, what are your thoughts on the macro? I mean, we've had the fastest hike rates in history, and the economy hasn't broken. Maybe we're wrong. Maybe the Fed doesn't need gold. Maybe they've really figured it out.
Maybe. It this is a sore subject for me because I just put on a short position a couple hundred S&P points ago, and I'm getting beaten up pretty good on that position. Which the reason why I put that position on is because I think that all this is nuts.
Hmm.
I think that we're way ahead of ourselves. But the thing is you know, valuations, it just hasn't worked for like
Hmm.
over a decade. So like, why would it
Right.
suddenly work now?
Hmm.
Um, I have tried to look more at kind of like the underlying economy more so than valuation multiples for my bear thesis. And to me, it just makes the most sense that if the if the economy is ready to decline as I think it is, then stocks go
Hmm.
down. And
Right.
if stocks don't go down in that environment, it's because the Fed pivoted. And if the
Hmm.
Fed pivoted, I just like gold and Bitcoin better than stocks,
Okay.
right? So
Hmm.
for me, it makes sense to, rather than chasing equities here at valuation multiples that are ridiculous, if we care
Hmm.
about those things, I think gold and Bitcoin are a better way to emphasize or express the money printer trade. And in the meantime, I'm going to short the actual equity market as a hedge if I'm wrong um, about the printer getting turned on,
Hmm.
because I look at, you have initial claims are starting to go up. You have home prices that are still highly, highly elevated at, you know, ridiculous levels. Meanwhile, the average mortgage rate is for a 30-year fixed is like
Hmm.
7 and change.
Right.
Um, on top of that, so you're already going to have, you know, slowing in housing, which is not good.
Hmm.
Um, and then you have labor potentially slow. The labor market, people are now having to like go back to work again, and I think that they're realizing that we had a year maybe of like stimmies, and you saw that
Hmm.
glut of savings ramp up, and it allowed people to not have to go back to work after COVID. But if you look at all this stuff now, You have savings rates that have actually plummeted, and they're really low. They're like well
Right.
below where they were heading into lockdowns. So people can't save money.
Hmm.
Revolving credit is going up big time. And now on top of that, you have, not a political statement here. I mean, I really mean that. I'm just looking at it analytically. But later this year, you're going to have student loan forbearance end. So now these kids or adults who haven't been paying back their student loans for the last 3 or 4 years are going to
Hmm.
suddenly have to start doing that, or at least budgeting for it. So,
Right.
so if the consumer is already tapped out and it looks that way based off savings rates and revolving credit
Hmm.
expansion, and they're doing this at high rates, by the way, like
Hmm.
if you have all that and you have a situation where initial claims are starting to go up, people are realizing, oh crap, I actually don't have any money and I have to go back to work now. um,
Hmm.
I don't know. I see a lot of companies, especially in tech, laying people off.
Hmm.
um, and I can't get there on why equities are roaring unless it's pricing in more stimulus or more easing or something of that nature, in which case I just think that other things work better. Does that make sense?
Right. Yeah, no, that makes good sense. I mean, all the stuff you've said, I think, makes a lot of sense. These things take time to play out, right? I mean, you talk about the mortgage rate being near 7%. I put out a chart recently talking about, well, yes, the mortgage rates now are 7%, but the effective mortgage rate, right, what people are actually paying
Oh
right
my
now is
god.
more close to 3%, because there's no people are basically putting off mortgages, which obviously they can't do indefinitely, but so but it's going to slowly climb up there, of course. And it's the same with all the effects from the stimulus. I've been looking at some conflicting information though on like how strong the consumer is, because I've seen those charts where they say, okay, well, savings are going to run out, in 2024 or whatever. But then I've also seen people say, no, actually, if you look at cash as a percentage of assets of households, it's actually near record highs, because obviously still riding off. The idea being, yes, we've got so much stimulus that it's going to take still ages to kind of get down from that. So I have been looking at some conflicting information, but it certainly
uh
seems to be heading that way.
yeah, I don't know, that's interesting. But like I think about it like, okay, you've got all these millennials and zoomers who are now, if they're in the market for a home and they actually can do this, and think about how much more expensive it is to buy a home at 7.5 or 7 than it is at
Mm-hmm.
3.5. You're talking like what's the average home price right now in America? Like $45,000. So if you're just talking about the average 45 or $450,000 average, the difference between aggregate cost at 3.5 and 7 is like $300,000, and
Right.
that
Yeah.
goes into the payment. So if you're making these people pay this much more just to have shelter,
Mm-hmm.
that money's coming from somewhere, and it's coming from consumer spending, it's coming from discretionary, it's coming from you know all the other fun stuff that people do, traveling, tourism, whatever. um, so I'm not sure that the real sentiment on the ground is that people have a lot of money. I just don't buy it. But I'm also in
Mm-hmm.
the Rust Belt, so
The
I
what?
kind of
Sorry.
I'm in the Rust Belt, so I see kind of
Okay.
a very depressed area, but it's been that way for a
Mm.
long time.
Right. I guess the only kind of wrench in the argument which we've been getting, the last few months is, AI, right? ChatGPT is going to save us, and basically that's going to, absolutely change the fabric of the economy, and I guess raise productivity. It's a compelling argument, but I don't think it makes that much sense personally. I don't know what your thoughts are.
Well, I have a love-hate relationship with AI. I think some of the tools are really fun and it's really interesting. Getting doing prompts in like Stable Diffusion and getting like pictures out is pretty amazing.
Mm-hmm.
But I think that we're discounting like copyright law and things like that. And how
That's
does
true.
a large company like uh, you know, Stable AI or OpenAI, I think is the other one, or there's like 10
Open
really big
AI.
ones. Yeah, how do these companies justify essentially scraping the entire internet for content materials,
Right.
much of which is copyrighted? Like, this is
They don't own
valuable
that, right?
IP, and
Hmm.
then selling it without paying the creator. Like, we're
Hmm.
going to, I just don't know how regulators and lawmakers are going to sit by and just allow that to happen. I think that there's a pretty big uh, copyright IP
Hmm.
headwind for AI, and I think that I don't think people are really thinking about that.
Yeah. I mean, like always, I think people get ahead of themselves. It's a bit. I mean, it's just like the internet revolution. I think to me, you got 1999, everyone saying, "Oh, this is going to be great." And, the internet was great. It just took another decade really to become as great and kind of entrenched as people were expecting back in the 90s.
Absolutely.
Hmm. Yeah, absolutely. I mean, the way I see it, AI is going to I mean, I do think it's going to benefit some people. I think big companies basically are going to benefit a lot from this, and again, it's going to lead to more consolidation, really, which is kind of what we've been seeing. And I think maybe some of the big companies, the Googles and the Amazons, they might be good trades, in the long
Yeah,
term thanks to
could
AI.
be.
But a lot of other companies, might be hurt by this.
I think, and I haven't really thought through my entire AI thesis yet. I'm trying not to get caught up in hype. I don't want to get too excited about certain things. Um, but so the way I think AI will go long term is task management tools will
Hmm.
be very helpful. When it comes to things like writing like code, it'll be where there are like strict rules about how things work. Very helpful. If I was in a role where there's some level of judgment, like human judgment or creativity that's involved, or critical thinking that's involved, I think a lot of
Hmm.
those positions are going to be okay for the time being. If I'm in a
Right.
position where there are very strict guidelines and rules, and I'm basically just managing workflow in
Hmm.
some, you know, like accounting, or
Right.
things like law, like certain elements of law, even though law is
Hmm.
very open to interpretation, as we've learned with Ripple. Um,
Hmm.
but there are certain things that people are still doing that they don't need to do.
Right.
And
I mean, that's for
I
sure.
think
Yeah.
that AI is going to really help people who are very bright and who think critically manage tasks a lot easier, and that may
Hmm.
result in some potential job losses of people who are doing kind of like the mundane stuff.
Right. The
I
the
came
grunt
from a
work.
I came from a media background and worked in several departments for about 15 years, and especially in an advertising department, I see so many jobs in that ad sales area that are just at serious risk because of
Hmm.
AI, because they're just mundane, and they can be what they're doing can kind of be abstracted away by some sort of AI tool.
Absolutely. Well, Mike, it's always a pleasure to talk to you. We've had about three conversations, and I really enjoy talking to you every time. Before we say goodbye, please let everyone know what you're doing on the internet, where they can find you, and why they should find you, I guess.
Yeah, well, hey, thanks for having me again. And, I share the same sentiment. Always enjoy talking to you. If you read Seeking Alpha, and many of you probably do because you're following James, I'm on Seeking Alpha as well. Everything I do is now public, so you can just follow me there, Mike Fay, Fay. And I also have a Substack that I've been working on for quite some time, and I enjoy writing there as well. It's investment sort of, but there's a little bit more of a social and cultural component to it as well. That's Faybomb, Faybomb.substack.com. A lot of what I do is free for a couple of weeks and then it gets paywalled. So you should check that out also.
Absolutely. Well, there you have it, folks. If you want to get to know Mike a little bit better, follow him on Substack, Twitter, Seeking Alpha. Mike, thank you so much, as always, for coming on. Best of luck with everything. Take care and look forward to the next one.
Absolutely. Take care.
All right. Bye-bye, everyone.